Answer report.
Hello, is that too loud or it's okay?
Okay.
That's okay, good. Well, good evening. So, first let me introduce myself. My name is Anthony Mancuso. I am a CPA, Certified Public Accountant, and I've been the treasurer of Condo 5 for this past year. At the offset, I just want you to be aware, and I'm going to sort of chime in with Leo said, that the current board has worked endlessly in dealing with the problems of the building. We've been committed to improving the building and trying to keep the building in top condition, and always with the best interest of the unit owners and the building. Having said that, let me talk about the financial situation of the building during the past year. Cash position. When we took over the board in October of 2016, we had $123,000 in our cash account. And now, as of October 17, we have $135,000 in our cash account. As a CPA, I reviewed the financial records of the condo and discovered that there were several items that were discrepancies in the condo's financial records. Case in point, Shaba the porter. Shaba was paid $14,895,000 for a pay period ending July 26, 2015, for 900 hours of overtime. It was a mistake. The payroll provider should have paid him only 9 hours. That resulted in an overpayment of $14,561. That overpayment was not recognized by the prior board. I did my forensic accounting and realized that a payroll provider had to reimburse us for the overpayment, which they did. And the money was transferred from HOA's account to our bank account. 2, workman's compensation. I reviewed the transactions with the workman's compensation during the year with the state insurance fund, and realized that we overpaid the state insurance fund $6,000 pursuant to a September invoice which I obtained from the insurance broker. What we did was we applied $3,000 of that $6,000 that they owed us towards the 2017 bill, and we are going to use another $3,000 towards the 2018 bill. 3, property insurance. The property insurance carrier had our insurance covered for building contents in the amount of $750,000, while all the other condos had only $50,000 in coverage. I did my analysis and questioned the real insurance broker and asked them, and they tell them they made a mistake in the premium for $821. They acknowledged that they made a mistake and reduced our premium by $821 for the current year. But unfortunately, we were not able to get a return premium for all prior years that we were charged for. Those funds, unfortunately, are lost. 4, a contractor did repairs to the roof at Condo 1 with $1,300. The amount was charged to Condo 5, and we paid it. And I had Condo 1 reimburse us for the repair, and we got back the money. 5, a landscaping contractor. He was entitled to $2,176 for work done on our property. We negotiated that amount, which was reduced to $544, resulting in a savings of $1,622. Unfortunately, your prior board was asleep at the wheel, and they did nothing to get back any of the monies, and since 2015. And they had no idea at all that the monies were paid or that they were due to our condo. So in essence, all 5 items wound up being a benefit to the condo buyer for probably approximately $20,000. So much for the cash receipts. Let's look at the expenses during the year. But first, I would say this. Our President Leo has spent many hours working on the repairs and saving the building lots of monies. Expenses. We talk about the new intercom system. I just want you to know that according to the law, New York State Multiple Dwelling Law, Title II, Section 50-59, and I quote, every class, a multiple dwelling containing 8 or more apartments shall be equipped with an intercom system. Every owner who fails to install or maintain, I underline the word maintain, the equipment is guilty of a misdemeanor. Well, because of the discontinuance of the current intercom models that we use in the building and the availability of the replacement units, the current intercom system could not be repaired, and therefore it needed to be replaced. Just for your information, we wound up spending $8,500 in repairs over the past 3 years. 2, the new compactor. According to the law on the compactor, New York City Administration Code 16120-2, refuge compacting system, it says that such refuge shall be maintained in good working condition and operated in accordance with the rules of the department. Any person who violates those rules shall be liable for a civil penalty. Therefore, because the old unit was completely destroyed and because the prior board instructed the porter to dispose of the refuge by hand, it became apparent that the compacted unit had to be replaced. And if you get a chance, by the way, compliments of Serge, who took a picture of the compactor. At the time, it was in disarray. It was a mess. And you get a chance to take a look at this picture because there's a little tiny fish who's sitting in the paw of the compactor. That's what our compactor was like. The third thing we did, we replaced the leader pipes on the facade of the building to mitigate the water from seeping into the unit owner's apartment, and the need for eliminating the cost of constant repairs. The repairs over the last 3 years cost us $16,000. The heating ventilation system. One of the heating functions of the 2 available was not operational, and the water system shut-off valves were not working. 5, we installed lobby doors to finish off the lobby. 6, we realized, rubberized solution was applied twice on the lobby tiles to minimize slipping on the glazed tiles. We wound up repairing the roof fans and the thermostat for the hallway ventilation. We put garbage bins installed on every floor in the refuge room for recycling according to the requirements of New York City rules. We purchased 2 DVRs for the operation of our cell surveillance system that was broken. We wound up repairing the air conditioning unit on the roof. We repaired water leaks in the roof, causing problems to unit owners. We painted lines and parking lots in the space in the garage. We repaired the hallway wall on the first floor because of structural damage and actually is still continuing now. 14. I prepared the financial statements for the accountant to certify in order to mitigate their costs. What you see was practically what I did. All they did was wind up taking their letter and signing it. That meant that they had a lot less to do than they had a lot less to do, and in essence, I did their work for them. Not only that, by doing that, I was able to give you a financial statement in the month of May, which is not what the prior board did last year when they took a whole year to give a financial statement. They did it in November at the meeting of last year. And the fifth thing, we put 4 pieces of framed artwork was purchased and hung in the lobby. So much for 2017. I want to look at 2018. You should have a copy of it, and in the stuff that was handed out, I prepared a tentative budget for 2018, and the results are as follows. Our revenues will be approximately $579,000. Our expenses would be $557,000, and we wind up with a net income of $22,000. So therefore, we should be in pretty good for the next year, for 2018. One other item for your information. Regarding real estate taxes, we filed a reduction for everybody's real estate taxes for the year 2017, and 2018. But unfortunately, the tax commission declined to offer a reduction in our assessment for any of the condo years. So, next year, when they have a hearing on with the tax commission, they can review the 2016-2017 assessment. So it's 2017-18, we're out of luck. We're still going to have the same real estate taxes that we had in prior years. But again, in your attachments there, the last item there, is what you need to know about your real estate tax assessment for 2018, which First Service Residential will be filing for you. So you should have gotten a letter from First Residential Service asking about the ownership of your unit. And they will, I think, take that and file for next year's real estate taxes to wind up with an abatement for your real estate taxes. As you know, I think the 15-year 421A assessment is gone, and we're going to be paying full dollar for real estate taxes. So it's important that you take care of that, and you only have, by the way, if you didn't do it, you only have until the 15th of December in order to send this back to the First Residential. Pretty much that's the case with the financial assessment of the condo of the past year. And I turn my microphone over to